Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Russell Thompson with H&R Insurance and Financial Services, and we'll be talking about what happens when business owners want to retire. Russell, welcome back to the program.
Thank you.
I think that it's interesting when you think about, when someone wants to retire, they file paperwork, sign up for Social Security and retire. But maybe business owners, it's a little bit more of a process. What is different with when someone that's a business owner wants to retire? What are some of those extra things that they need to be considering?
There's a lot, and there is a big difference. So most business owners, their business is their retirement plan.
Yeah.
So at some point, they need to turn that business into income, and they want to exit and go away and live a happy retirement life. So there's not a date. There's a process.
Yeah.
So, a lot of business owners, they're busy growing their business and they're busy making money, and they actually they don't take the time because they are busy to plan an exit strategy. How am I going to retire? So, there's several ways to do that while you're growing your business. You can do some type of 401k for your business. You got to figure out at some point how are you going to turn that business into income? And a lot of the exit paths typically are sell to a third party, such as, a competitor or some type of private equity group. You can transition it to a family member or some type of internal successor, someone you trust who's worked with you, been with you a long time. A structured buyout needs to be put in place early. It's hard for these guys to come out and say, okay, I'm 65, maybe they had a health hiccup or something, but they can't perform at their work the way they used to. So they have to sell it quickly. Well, that's hard. If you haven't done other things, because a lot of businesses are valuable, very valuable, and they produce a lot of money, but they're illiquid.
Yeah.
So there's not cash there for them to take. So there's several ways to build cash as you go. Again, please get out there and meet with a professional way beforehand, way before you decide to retire.
Yeah. You can't decide, hey, I'm done with this. I had a bad month and I'm just going to sell. So let me put a for sale sign up on the business. You can't do that. It's very similar, I would venture to say, to like, I want to sell my house. Let's have an agent come in and give me a value. And, look, you should do the following repairs and renovations to get the highest price. Same with the business. What's the business worth now? What could it be worth with a little bit of effort and time? And maybe you spruce this up and that up. And that's a whole process. That's a whole, 3-day seminar right there in that conversation. But to your point, you've got to know well ahead of time. And then, what about a buyout and a structured buyout and all of those options, selling it to family, selling it to the employees? There's a whole process. You cannot just do it on your own. But I want to ask you this question. I've read a book recently. I think it was called Exit Without Exiting. And it was talking about how some business owners, it's just their life. They want to get out of the day-to-day grind because it's just wearing them down. They're ready to retire, but they're not really ready to give up their baby that they built. So what they were talking about is, look, let's spruce things up and create processes and operationally to where you come in once a week. You've got a CEO, you've got a president, and you're doing all the fun stuff, the stuff you love to do, whatever that is. But all the things on the list that you hate to do that just make you just feel overwhelmed, you have the other people do that, so that now, in essence, you're exiting because you're exiting the things that you don't like, but yet you're just coming in once a week, maybe then once every other week, then once a month, and you're doing all the things you want to do. Have you seen some of that play out with your clients?
I have. And at the end of the day, if that's what you're doing and what you want, that's great. But what if the people or a main person you're relying on wants to leave? They get a better offer at another job or whatever.
Yeah.
So you have to prepare for that.
Yes.
And there's several strategies to do all this. but the one I'll touch on first, that a lot of people go this route, especially in larger businesses. And when I first got into the industry, I was really surprised how many business owners would take out life insurance policies, cash value life insurance policies on key employees. So you're
Okay.
relying on this person to run your business so you don't have to do it. What happens if they suddenly pass?
Yeah.
What do you do then? And then how do you retain them? What if they do want to get a better job? How do you, it's called golden handcuffs. How do you convince them to stay? What's at the end of that rainbow? And people use life insurance for this, and they call it key man life insurance. And you tell this individual, you stay and say, you're here for 10 years. I'm going to take this life insurance policy out on you because I rely on you. And if something happens to you, my business is in a mess now.
Mm-hmm.
But if you stay here for 10 years, 15 years, whatever that time frame is, I'm going to give this to you, and there's going to be cash value in it that you can access tax-free to help you with your retirement.
Mm.
And you will have life insurance to leave as a legacy to your beneficiaries. But you have to stay here this long.
Yep.
So, and it's a great strategy. It can be structured multiple ways, and it's too much to kind of get into on this podcast. But you can use that in so many aspects of retaining key employees because they know, okay,
Yeah.
this guy might pay me more by the hour, but when I retire, I have this extra money for when I
Yeah.
retire.
And they might be thinking, well, I'm just going to leave because they give me a better lunch hour or a vacation or a little bit more pay. But in reality, if you got something like this in place, that really could help retain those key employees longer.
Now, that's a big thing with business owners is employee retention. It's taking the time to train someone,
Yeah.
and then trust them and rely on them, and they get vested. You don't want them to go away.
Yeah.
You've put a lot of time and effort and money into this employee. So, it serves
Um,
multiple purposes.
I know you're not a tax person, but have you heard of tax benefits to the business owner for setting up something like this? Because I do know that if you were to set up a 401k for employees, when the business contributes to the employee's 401k, that contribution has some type of business tax benefit to reduce, things like that. But is there a similar thing when you're funding this type of a plan to help retain employees?
There is. It's a little different, but it's a tax code that says if you do this life insurance policy for this person and you give it to them, the premiums are taxable to them.
Okay.
But you can bonus them the money to pay the taxes on that.
Got it.
So there are tax benefits to this. And then of course when you do this, it's a write-off for the business.
Yeah. So definitely talk to your CPA, talk to your tax preparer to make sure of all the things. But suffice it to say, if you're going to do this kind of a thing to retain key employees, there could also be some business benefit to the business. So you're going to get some double benefit that way.
Absolutely.
And also, I would think that if this plan is in place to retain key employees, it would also, on the flip side, be an attractive plan to attract top performers. So you might have more than one key person that you want to have this for, and you might be growing. You might be in a business where you're wanting to hire 3 or 4 or 5 VPs over the next 5 or 10 years. And if you've got this plan in place, you can point to it, and that would help attract key people when they're trying to choose between your company or someone else. And this might be a wonderful way to attract and hire key players.
Yes. And so I'll give you a kind of a story on that. I remember when this came out, Forbes magazine put it out when Jim Harbaugh went to Michigan. A big part of his package was an index universal life insurance policy.
Hmm.
that the college put in for his hiring package. And it was large, but they structured it in what's called a split dollar plan. And business
Hmm.
owners can do this. So they're putting a bunch of money into this life insurance policy because remember, if this individual takes cash out, it's tax free. And
Hmm.
definitely high income earners use this a lot. But at a certain point, say 15 years into the policy, they paid on this. Now they can stop paying and take the premiums back that they paid into the policy.
Hmm.
And that's called split dollar. And there's enough cash left in it to support the policy. And it's the way it's structured and the way this is done. So it's not a normal life. And the life insurance policy is a life insurance policy, is what everyone
Yeah.
gets. It's just the design and the structure of it that allows these businesses to come in and take their premiums back. And that policy has enough cash in it to support it so that this person can take money out tax free and that policy still stay intact. So
Yeah.
it's a neat concept and a neat plan.
Yeah, who would have thought? I mean, that's high level, and probably in the Harbaugh example, it would be neat to see the case study. But probably in his decision making process, he's looking at this school or that school, and now he's looking at this opportunity and going, "Hey, that's unique. That's great. That's legacy for my family." The school's looking at it, going, "Hey, well, if we structure it the right way, we get these benefits, and it's a win-win-win." So that's
Yeah,
really neat to hear.
yeah. It was
So you
really
mentioned the key person. Then you mentioned briefly. I want to dive a little bit deeper into the buy-sell agreement for business partners. Yes, that's very important. We know we've heard about that, but why are properly structuring or at least having a buy-sell agreement? Why is that so important?
well. So, if two people are partners, and you could go on for four or five, and one of those partners pass away. If you do not have a structured buy-sell agreement, you just became partners with their heirs, and they
Yeah.
have every right that that owner has. And I've had so many conversations on this to where people, business owners say, "Yeah, we have it in contract. What happens? How much the buyout is not. Well, is it funded?
Hmm.
Because if it's not funded, it's not worth the paper it's written on.
Hmm.
So
Now,
if you
what does
have
funding look? What does that mean? What does it look like to have it funded versus just have it on paper?
meaning that buyout of those shares of that individual is there.
Okay.
Where does that come from? So do you have the money on the side? Do you have it? Are you liquid enough if something happens for one partner to buy out the other?
Right.
And it's if you don't have this in place, I ran across one business owner who had a partner who passed away, um, like a month before I met with him, and his business was put into probate.
Mm,
So
that takes a long time.
oh, that did, and it was very stressful on him, and he didn't know what he was going to do because he didn't have the money to just buy them out, and he did not want to be partners with that partner's heirs. So it's very important to have, and the funding part, you can agree on a price, but if you don't tell the heirs how they're going to get their money, or are they just going to take your word for it? Are they even going to agree that what your partner and you agreed on what a fair buyout looks like? Are they
Yeah.
going to say, I agree, that's what it's worth? So it needs to be contractual. And this, a lot of times, so much just, you know, pennies on the dollar to buy a life insurance policy
Hmm.
to cover that. So you're not having to take a loan or you're not pulling that cash out of the business, which could affect the operating
Yeah.
for the business. So, and
Yeah.
that's, yeah,
A couple things there. Like I didn't think before, like, oh, I'm partnered with so and so and they passed away. And oh, well, I don't like his brother. who's going to take over, and that could be a nightmare. Well, having that proper buy sell structured is important to protect that. Secondly, how is it funded? If you have a bunch of money sitting liquid in the business, it could be better deployed somewhere else potentially. So you need to know how it would be funded, and maybe having a good cash value life insurance policy on the partner would be that funding, and then that would be a better use of the funds rather than being liquid, because many businesses don't have that huge amount of money liquid, at all. And even if they did, is it the best place to have that money sitting?
Correct. It serves multiple purposes. That cash value can. So say the partner gets hurt and he can't perform. He's not the asset to the business that he was, or he just can't work and he has to retire. Where's that money come from? No, if there's cash value in that life insurance policy, the business has been paying the premiums more than likely. That's usually what happens with that. And you go, okay, there's this much cash value in this life insurance policy. This is going to be a part of your buyout. So you can transfer, say the business owns it, or usually individuals own it on each other. So it's easy to transfer. But when you transfer ownership of a life insurance policy from an owner to the insured, there's a rule called the transfer of value rule. So it avoids that transfer of value rule. So, and again, get with your CPA on this. I'm not an accountant. I just, I've been through this and know how it works. But that transfer to the insured avoids that transfer of value rule. So there's no taxes on that transfer of cash to that individual.
Mm-hmm. All of these things that we've been touching on, structured buyout, full buyout, partial buyout, exit without exiting, all of these things means you should be doing it well ahead of when you want to leave or exit, right? How early should you begin? I mean, I know in a perfect world, you'd want to have these things way ahead, but, bare bones, how early should a business owner be starting to have these things in place and prepare?
That's a broad question because when businesses first start up is when they should do it. But if they're not making, producing the money to do it, it needs done quickly. So it all depends on the business, how much they're making, how much they can afford. At the end of the day, the business has to be able to afford it. It needs done. I wouldn't go, it's imperative to have it done at some point. And the sooner the better, because life insurance premiums are based off age and health and several other things. But those are the two driving factors in how much a life insurance policy costs. And when you're looking at a certain death benefit, because that's what is needed to fund it, then the older you are, the more that's going to cost. And can the business afford that? So the earlier, the better. But it's such a broad question because every business is unique and their situation is unique.
So let's wrap up with this question. If you were to say, hey, the number one biggest retirement planning mistake business owners make is what?
Not planning.
Not having a plan.
And that's the biggest mistake. I've only ran into a few businesses, and again, this has been for the first 10 years of my 15-year career. This is what I did was just I helped with succession planning with businesses, and only a couple said, yeah, we did that when we drafted up the contract to start the business together. It just doesn't happen that often.
It's kind of like when you fail to plan, you're planning to fail.
Yeah, that's exactly it. It's a great analogy.
Yeah. Wow. Well, Russell, this has been really eye-opening for business owners wanting to plan for their retirement. If someone is interested in reaching out, maybe having a little bit of help that way in their business, what's the best way they can connect with you?
They can email me at russell@hr-ifs as in endemfranksierra.com, or just go to our website at www.hr-ifs.com. That's Endem Frank Sierra.
Excellent. Russell, thank you so much for coming back on. It's been a real pleasure chatting with you today.
Thank you.